Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
So we're going to stay with those GLP-1 drugs, talk a little bit more, because we had Eli Lilly narrowing the gap with its rival Novo Nordisk in the race to dominate the red-hot obesity market as it expands its supplies of weight loss drugs. Lilly lifted its 2024 revenue outlook for the second time this year on the strength of its weight loss drug. Shares of the company soaring in today's session. And it was just yesterday, Matt, you might recall that Novo, was that one of your decliners?
Novo, no, I don't think it, it was 2 days ago. One of my decliners.
Oh, a couple of days.
Two
Okay.
days ago, yeah.
Reported disappointing second quarter sales of Wegovy, saying price concessions for companies that manage prescription drug benefits in the U.S. cut into its performance. So we did see investors push down shares. So let's get to it. There's a lot going on in the space. Our GLP-1 guru, can I call you that, is Bloomberg News health reporter Madison Muller. She's here in our Bloomberg Interactive Broker studio. You are the guru. You're going to take it to your grave.
I feel like you're a guru now, too. We talk about it so much.
Well, I think
Semaglutides. By the way, Ozempic and Wegovy, same thing.
Same
right?
thing.
And
Wegovy is a higher dose. But
okay,
same drug.
Mounjaro and
Zepbound. Same thing.
Same thing. Okay. Good.
Yeah, no, it's right. Very nice.
Well, I'm just wondering, when we get these stats, like Zepbound sold $1.2 billion worth in the second quarter. That does not count Mounjaro.
Right. They're separated out, and it's interesting because Mounjaro has been on the market longer.
Right.
But Zepbound has just ramped up.
And it's
so
also
quickly.
interesting because that's the one that people talk about as the fat drug. And the same is true with Novo. It's the non-fat drug
Matt,
that
you
people
can't call
talk
it fat
about.
drug.
Well, whatever you want to call it. I also think it's interesting that Eli Lilly calls their weight loss drug Mounjaro, which is like...
Can I have
what an Italian says for go eat your dinner, right?
Well, there's actually a story behind the name.
What is it?
Mount Kilimanjaro, like smushed together. And so if you look at the label, you can see there's like two little mountains.
Oh, that's interesting.
Yeah.
Who knew?
Yeah.
Hey, those
Fun
drug
fact.
companies, man. All right, fun fact. So let's talk the nuts and bolts of your world. Earnings, Lilly today, upbeat. Novo, not so much. Investors reacted accordingly. How are you thinking about the space and kind of the reporting that we're seeing?
Yeah, I mean, we've been talking about supply and the supply shortages for a long time, and that sort of continues to be the story. It's what we're seeing again the last 2 days with Novo and Lilly. I mean, Novo struggled and missed sales estimates yesterday. Lilly sort of smashed them out of the park today.
So the business is good. It's just a matter of if you can keep up.
Yes, exactly. And Lilly, both companies have invested billions into ramping up manufacturing. It just seems like Lilly's issues are starting to ease a little bit faster than Novo's maybe are.
Because they have way more money. So the idea is you can make as much as you can sell, right?
Yeah, definitely.
And Eli Lilly is an $800 billion company, right? So they have more resources to boost production. Novo is, I don't know, like a $10 billion company, right? I don't even know. It's less than 10.
I mean, it's the biggest company in Europe now.
It's worth 3.8 billion Danish kroner.
It's a $568 billion market cap company, the ADRs that trade here.
Oh, is that 3.8 trillion? In any case, it's worth less than Lilly. And it's done worse than Lilly. Over the past 5 years, Eli Lilly's shares are up 643%.
Yeah, I mean, Novo's a smaller
Novo's up
company.
416%.
Lilly's more diversified. They've been at this both companies have been at this for a long time, but up until the last few years, Novo's bread and butter was just diabetes. So Lilly has a slew of other drugs, cancer drugs, autoimmune drugs. They know how to ramp up production, and they know how to do this and plan for future demand. And this is all relatively new for Novo. I mean, this market is crazy.
We want to get into a story that's on the Bloomberg that's a killer. But before we do that, we're about 1.5 years into talking about this class of drugs. You've been reporting so much. I feel like every couple of weeks or something, there's like, hey, look what else these drugs can do. Your view, your thinking, your reporting, how does it continue to evolve? And how you think about the future?
I mean, it was interesting actually today on Eli Lilly's earnings call. They kind of slipped this into the call. It wasn't huge news, but they're no longer calling their obesity and diabetes business unit just obesity and diabetes. Now it's cardiometabolic health, which sort of signals this bigger thing that we've been talking about, that these drugs, aren't just weight loss drugs. They have potential indications and are potentially able to help with a lot of other conditions that are sort of interrelated with heart disease and kidney disease and liver disease. And so, I think that is going to be a huge theme going forward. And the fact that Lilly kind of mentioned that on the earnings call today, I was like, so they're thinking about it this way too.
It's all about brand.
I mean, I've wanted to take this forever, as you both know. Not just because I'm fat, because I only need to lose 20 pounds, but I want to have a healthy heart so I don't die soon. And I'm pretty sure I'm going to get Alzheimer's disease. This may stop that as well or slow it down. On the other hand, there is so much optimism for mRNA as well. Yeah. And that didn't cure cancer yet, so maybe it's going to take a while.
Yeah. I mean, it's different, right? mRNA was amazing for COVID. I think,
was it that great for COVID? Because I took it and then kept getting COVID.
Here. Yes.
All right. To be fair, because I don't want to waste time, because I want to get to
the story, to the Bowling Green story.
Let's talk about it. It's among the most read. Take us to Ozempic Town.
Yes. So you've known about this story for a long time, because I spent quite a bit of time in Bowling Green,
Kentucky.
In Kentucky, yes, not Bowling Green, Ohio, because there is a Bowling Green, Ohio as well. But has 4% of Bowling Green and the surrounding area, people are on weight loss drugs, and it's just changing the fabric of the area economically, culturally, but in sort of surprising ways. I thought that I would go there and the restaurants would be empty and the gyms would be closing down, but it's sort of the opposite. I mean, restaurants are still full, the gyms are doing great, but what's happened is this side economy has sort of formed alongside the drugs. So there's medical spas that are cropping up everywhere to sell these compounded drugs. The GNC is doing great business selling supplements that help with side effects, and so it's it's actually helping business, but in sort of surprising ways.
I have a couple listener questions.
Okay.
Do we have time?
As long as they're pertinent to this story.
Yes. So listener writes in,
related to this story.
What happens if you take the pill and you're in shape? Which is, I think, a good question, because a lot of people, especially, on the Upper East Side, they're already skinny, but they want to take it anyway.
Right. Well, I mean, that's the thing. It's doctors shouldn't be prescribing these drugs because it's a prescription drug.
But is it a problem? Do you stop eating and then you become anorexic, or?
I mean, it could be dangerous. If you don't need to lose that much weight and you're on a weight loss drug that's really effective, probably not.
Leads well into the second question. When do these become over the counter and affordable?
Well, that's a good question. Yeah. I mean, they're probably never. I mean, I don't want to say never, but they are prescription drugs, so they're not over the counter. But generic drugs eventually will come down the pipeline. We're already seeing some of the older GLP-1 drugs, the first sort of wave of these, like Saxenda, which is a drug called liraglutide. That's already on the way to becoming generic. So
it's a better name too.
Saxenda.
Saxenda. Or Sextarta would be better.
Okay, all right. I'm going to put you on the side for a moment. So go back to your story, because it's really cool. You guys, it was several reporters involved in it, and you really get into the specifics of the people there. How did you find it, though?
Yeah, so, I mean, we worked with the data team, and we worked with this analytics firm called Purple Lab, and they gave us 3 zip code level data, which, kind of gives you a city and then the surrounding area. So we looked all across the U.S. We wanted to see what the Ozempic hotspots were. And, Bowling Green wasn't the only one that came up in the data. There was Huntsville, Alabama. There was a few other areas. But Kentucky as a state has the highest concentration of weight loss drug users. So we were this is probably a good place to start. Clearly stands out in the data. And then once we started talking to people in Bowling Green, it was okay, this is our spot, because everyone here is either on the drugs or knows 5 other people that are on them.
I mean, can we make the assumption that it's just an area where there's a fair amount of people that are overweight?
Yes, yeah, definitely. I mean,
you can make that. As someone who's been there, you can definitely make that assumption.
No, to be fair.
Yeah, I mean, the obesity rates are high there, the diabetes rates are high there, and in Kentucky across the board. So it's actually a good thing that there's a lot of people taking these drugs in that area, because it means hopefully it's helping with
not
these
just
health
Kentucky.
conditions.
I mean, you get off the airplane at CMH in Columbus, Ohio, and you notice that immediately as well. But there was a great line in your story by one of the women who knew it. Yeah. Right? She says, "We're redneck enough." What'd she say?
She said, "We're redneck enough to be fat, but smart enough to do something about it."
She was owning it.
Yeah, I mean, listen, I think it's been an incredible game changer for a lot of people in their lives who struggle, and there are people who struggle with being overweight and who've tried a bunch of different things, and I've seen it firsthand with individuals, and then they take this drug and it's just unbelievable the difference.
Right, and that's the big thing with these drugs is there's also been this changing understanding of obesity as, you know, a biological health condition that's driven by someone's biology. That's not necessarily just because, you know, these tropes that have long been repeated that someone's lazy or that they're eating too much. Like, there are biological mechanisms driving this, and these drugs help with that. So it's for people who need them, it's an absolute game changer.
What surprised you about, like, going there and talking to these people?
I mean, that's a really good question. I like didn't have a lot of, I don't know, understanding going in, because that was my first time in Kentucky. So I was like, I don't know what this is going to be like. And everyone was so willing to talk to us and share their stories. And like, they were so grateful for these drugs. But I think that maybe this is the thing that surprised us is like, everyone had this great success at the beginning, and then something happened. Either their insurance cut them off, or they couldn't find the drugs anymore because of supply shortages. And I guess that shouldn't have surprised me, because those are all themes that we've been reporting on for a long time. But
so you're saying if they stop taking the drugs, they're no longer successful?
Well, no, not necessarily, and like they have found other ways to continue taking them. But I think I was surprised
so they keep
that
taking
like
the drugs and they're still successful.
Yeah.
But if you stop taking the drugs,
then oftentimes you gain the weight back.
Exactly.
I mean, that's not something that we saw with the people that we spoke to, because they all were able to, like, one guy switched to another drug, someone else started taking a compounded drug. So, but I think it was surprising to me that, like, everyone across the board that we talked to encountered one of these issues with accessibility or with, you know, supply shortages or price or something. Like, it really is just affecting people.
I mean,
a lot.
It strikes me as obvious that if it's $1,000 a month and in extremely short supply, it's going to be difficult to keep paying for it every month and keep finding it.
Yeah.
And if you stop taking the drugs, for the most part, you put the weight back on.
Yeah.
Unless you start taking the drugs again.
Right.
Yeah.
Are most of these people, though, is insurance paying, or how much was out of pocket?
It was, most of the people, insurance was paying at the beginning, and then like 6 months in, or once they had lost a certain amount of weight, insurance stopped paying for them. Some people went to these compounded off-brand drugs that we've talked about before. Other people were able to, like, one guy switched from Ozempic to Mounjaro because his insurance would cover Mounjaro but not Ozempic.
Right.
So, like, everyone was able to continue taking the drugs for the most part, but I mean, Pat Stiff, who's one of the characters in this story, like, he switched from Ozempic to Mounjaro and then couldn't find his Mounjaro anywhere because the supply shortages were so bad. So he was, you know, as we're like finishing up this story, calling me and saying that, well, I'm just gonna have to go off the drug and see what happens, and it'll be like an experiment. Hopefully I don't gain the weight back. But yeah, it's a struggle, I think, for a lot of people.
It's a slice of life. I just want to go to the posh salon.
Yeah.
No, but it's just interesting. Yeah. And I do wonder, you know, at some point, does the medical community say that you, because we've talked about this, do you have to be on this for the rest of your life?
Right.
Unless
to
you
reap
develop
all the
willpower,
medical benefits.
in which case you don't, right? That's my problem. I just have no willpower, which is why I want the drug.
Yeah, I don't know. Like,
but it's not always about willpower.
Yeah.
Like, it's for a lot of people, a biological thing that drives them to eat, that you know, it's not as easy as
drives them to eat like high calorie, low nutrition food.
Sometimes.
Yeah. I know.
mean,
I have the same problem. If I drive by a Wendy's, I need a Frosty, you know?
No, you're not going to win.
No.
Anyway, it's you know, these are one of those stories, a slice of life, but just something that we talk about so much, but to see it kind of so dense in terms of the amount of usage and so on. Great stuff as always.
Thank you.
Really appreciate it.
Amazing story. We forgot to mention what they do in Bowling Green. The most important thing.
Corvettes?
They make the Corvette.
Yeah. Pat Stiff works at the Corvette, plant.
It's amazing.
You left that for the end?
I love the car.
Madison Muller, you survived with Matt.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hey, listen, we want to get to a stock. It's been the number one decliner in the S&P 500 and NASDAQ 100 today. We're talking about Warner Brothers Discovery plunging to its lowest ever. Parent of CNN and TNT posted a second quarter charge of $9.1 billion after writing down the value of its traditional TV networks. This came after the closing bell yesterday. The company, as you know, created back in 2022 when Discovery acquired Warner Media. And it's concluded that cable channels like CNN and TNT are no longer worth what they were when that $42 billion merger was completed. So let's get to it with Bloomberg Intelligence senior media analyst Kevin Neer. He's joining us here in our Bloomberg studio. WOA, it's never good.
Yeah. Not
when
good.
You've got
Not from Warner Brothers Discovery, is it?
When you've got a more than $9 billion write-down, what the heck happened, and why are we here?
Yeah, it's a great question. I mean, it's certainly not just Warner when we're talking about traditional media in general. It's a very transitory period. But you're right. I mean, that $9.1 billion write-down, that's from the TV networks, right? That's essentially saying that, we don't see that this is valued in line with what our market cap is, and we had to take this down in the book value. They're obviously trying to scale up their streaming, but the TV networks are still the bread and butter. That's where they make the majority of their profit. And it was a big miss. Advertising down 10%. There's pressure on affiliate fees, obviously, with cord cutting. And then on the studio side as well, it was weaker than we expected. So the stock is noticeably down today.
I feel like there's something I'm missing here.
Which part?
Like John Malone and these corporate titans are destroying shareholder value for a reason. Like, when Zaslav came in and said they'd already made Batgirl, right?
Right. And
he just said, I'm going to erase this content. And he did it with Coyote versus Acme, and he did it with a lot of content that you would think is, even some Sesame Street episodes were just disappeared.
Right.
And the reason was he gets some tax benefits from just dumping this content that they paid so much to make. Is he just trying to shrink this company? I mean, they borrowed $40 billion to buy this from AT&T, and now the market cap is like $18 billion.
Yeah.
The stock has lost 70% of its value. Does he get paid more as the stock does worse?
Yeah, I can't speak to his pay, but
well, you know that he got paid $50 million last year.
Right.
And what did he get when he came in?
It was some crazy benefit. It was hundreds of millions.
230 million?
So,
it was quite high.
So the purchase, bad deal.
It's tough to say it's a bad deal at this point. I mean, we have to zoom out a little bit and think again about the combination here. Obviously, all of media is facing these challenges. It's not just Warner Brothers Discovery, but
so when
across
the board.
Why did they do it?
So
Discovery was doing just fine.
No offense, we've been talking about ESPN having issues for a long time, right? And then it seems to have kind of righted, maybe as it's moved more into streaming. But having said that, 2 years ago we knew the model was changing.
Right.
Why would you do this then?
Right. I mean, the model has changed, and also Wall Street's attention has changed. Back then people were focused on subscriber growth, and people were spending to grow subscribers, and it was all fine when that was the case. But after Netflix posted their first subscriber decline, everyone went, whoa, hold on, maybe subscribers aren't the metrics that we should be looking at. This isn't the North Star. We need profit. We need profitability, and it's taking longer than we thought for these streaming services to scale up. They're starting to inflect, but it's taking time.
He said yesterday on the call, am I disappointed that the trends in the linear business haven't been a little better? There has been talk about a recovery a year and a half ago. It hasn't really happened. It is what it is. We're managing this as best we can.
Right. And we can talk about this past quarter all we want, but I think where investors' concern lies is on the lack of visibility, right? I mean, this whole NBA debacle has been really a head scratcher.
Let's get into that for a second.
Yeah.
So for those who don't know, how did they lose this?
It's been quite the saga.
They had NBA games, which is the kind of thing that it doesn't matter where it is. If you like
Destination
basketball,
viewing.
you're going to tune in.
That's right. You're going to pay for it. You're going to do whatever you have to.
Exactly. And they had an opportunity to negotiate for a renewal exclusively. But if you just look at sports rights, not just the NBA. I mean, you talk about the NFL. Those rights doubled, right? So it's a cost problem. Everyone across media is trying to cut costs right now. Warner thought they could get for a smaller package maybe, but the NBA wanted a broadcast partner, NBC. They wanted to stick with ESPN, and then they're bringing in Amazon for the streaming service. So it's just been a back and forth right now.
If they hadn't lost that, would we still be having some kind of conversation about Warner Brothers right now? Would it have been a smaller charge?
Yes, I think so. I mean, again, the quarter is the quarter, but really it's the question of what's going to happen with TNT, with this big hole in their programming schedule. And they can go after some other sports rights, maybe the UFC, those renewals are going to come up soon, but it's a tough position that they're in, and now that it's going to court.
David Zaslav also said on the call with investors yesterday, 2 years ago, market valuations and prevailing conditions for legacy media companies were quite different than they are today. This impairment acknowledges this and better aligns our carrying values with our future outlook. Is he right? Were they that much different? 2 years ago?
No,
you follow the industry.
I've
It's a
heard
great
this
question
also from another number of people that near the end of the pandemic, we thought this was going to be okay, or these assets were going to be worth more.
Right. I mean, there's just so much content out there now. You got to understand. I mean, engagement is really where management wants investors to look at. Is where people are spending time on our platform. They're going to continue to pay for our.
We're
our
a household that's
service.
whittling. We just canceled something yesterday.
We're
not really using it. We had it for, Curb Your Enthusiasm or something. Sorry, but
of course you have Curb Your. By the way, that's HBO, which is like an amazing property.
But
they changed the name of HBO Max to Max. That's like if you had Disney Plus changing the name to just Plus.
I know.
Right.
Why would they do that?
And consumers wonder why they can't find anything.
But my point is, like, we're looking at it, this huge menu, and we find ourselves maybe looking at a couple of things. I don't know that I need that monthly every month. You know what I mean?
You're right.
You just get to a point where you start to kind of curate, if you will, or just say, do I need this extra cost?
A lot of people are thinking about it that way. Streaming services, almost all of them have announced or implemented price increases this year. And then those that haven't, Netflix is the big standout. They're cracking down on password sharing, right? So it's becoming more expensive to stream, and the play is really advertising, right? They keep a low entry cost for advertising because they want people to sign up for that tier.
Matt and I were talking in the newsroom. I mean, Kevin, wasn't Discovery kind of a nice little business?
It was.
Very niche.
It was.
But very clear in terms of what it was all about.
Very low cost programming, a lot of unscripted. You think Food Network and HGTV. And again, when we had such a critical mass of pay TV subscribers, it was great. It was a great, healthy business, healthy free cash flow. And it's just not the case anymore. Cord cutting is not slowing down. And the question is just how do we get our content and monetize it in the best way possible?
This has been kind of a cursed asset. To be fair, right? AOL Time Warner was the biggest deal of all time when we were kids, and then they had to write off AOL completely. AT&T came and bought it for half price, and then they sold it to at half price to Zaslav. And I mean, who's going to buy this thing for half price now?
I mean, you make a great point, but I would also point back to it has some great assets. You mentioned HBO.
It's called Max now.
It's called Max now.
Ouch.
They have a really world-class studio. I mean, this is a company that makes Superman movies, Batman movies. Again, they own a
Barbie,
video
right?
game studio. They made Barbie. They wouldn't have Barbenheimer without Barbie.
I still love Barbie.
The reason we had Oppenheimer, by the way, at a different studio was because the director could no longer deal with this studio.
Chris Nolan was shopping around Oppenheimer
You're
for a
sitting
while.
down with Zaslav. We've only got about 20 seconds. What do you ask him? What do you want to know?
What's going to happen after this NBA, whatever you're doing in court trying to sue the NBA, what's going to happen after that?
He says it's with the lawyers now.
Yeah, exactly.
It's always with the lawyers.
Yeah.
All right, Kevin Neer, thank you so much. Bloomberg Intelligence Senior Media Associate Analyst joining us right here. This on a day when we are just watching the shares of Warner Brothers Discovery just sink. This is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So a story that caught my attention, our attention, some proposed rules, how they this is proposed rules for disclosing when AI-generated content appears in radio and TV political ads, have spurred some debate over whether the Federal Communications Commission is the best government agency to regulate on the topic. I mean, people have been talking about, like, who oversees it? What's the matter?
What are you talking about? I'm lost.
Well, we're talking about rules when it comes to AI-generated content and who needs to oversee it to make sure that things are accurate, whether it's in politics or in general. Are you lost?
Yeah, because I don't think you can make such rules. If I create AI on the computer in my basement, who's going to oversee me?
I don't know, but maybe somebody should if it's inaccurate or false, misleading, that leads to bad things.
Assuming it will be inaccurate, false, and possibly misleading.
Let's see what our next guest
Probably
has to
so.
say. Greg Petro is with us, CEO of the retail technology company First Insight. He's going to save us. Joining us from Pittsburgh, Pennsylvania. He's the author of The Tyranny of Now, How Technology Impairs Good Judgment and What You Can Do About It. His book out last month, as I mentioned, joining us from Pittsburgh. good to have you here with us. As you can tell, we're having a little bit of a debate, a little conversation here, maybe right now. First of all, remind the world what your company, exactly what you do, especially when it comes to helping retail customers find their customers or communicate with and interact with those customers.
Yeah, great to be with you, Carol and Matt. So First Insight is a company that we've been around for 17 years now. We're a global company, software company, helping retailers, brands, and manufacturers understand consumer needs and demands. We create a space in predictive analytics using AI and voice of the customer to understand specifically what consumers want in the products and services that those companies offer. So it really is about closing the gap between where the consumer sits today, especially in a very dynamic world, and where those decision makers sit every day. And in many cases, they're making those decisions 6 to 9 months, 12 months in advance. And it's our goal to help them close that gap and make better decisions.
So which are the new technologies that, I mean, if you tell me new technology is making decision-making harder, I would agree with you wholeheartedly. And I am instantly think of social media. Which technologies are you talking about?
Well, I'm talking about when I speak about the tyranny of now in the book that I've written, it really refers to the entire platform of technology, the advent of the internet, social media, smart devices, and the inundation of data to every one of us, whether we're a consumer or a decision maker. And each one has a challenge related to it, a benefit and a challenge, Matt. And at the same time, we're driven off this immediacy of right now. Let's make a decision. Answer me right now. You know, we confuse oftentimes response rate, meaning to a text, to politeness, right? Is that responsiveness actually going to improve anything in that decision making or that discussion? I write quite a bit about that in the book, and I think that when you look at it, you have to actually break it apart.
It makes perfect sense, though. I mean, the fact that we're all reachable and everybody's texting me, you know, in the past, I would talk to my mom on the phone once every couple of days. Now she's texting me 2 or 3 times a day and always asking me to make a decision that I feel like I have to answer immediately, right? And you're saying that pushes me to maybe make the wrong decision sometimes.
Yeah, I write about it, calling it snap decision making. The need for us organizationally and companies, and at the same time, individuals, responsivity, the need for us to give an answer immediately without pausing before hitting the send button. I read a great story about the example of the Southwest CEO and what that caused when he hit the send button prematurely. And many other examples, you know, during COVID, the decision making that many individuals made about the housing moves and the housing purchases that they made in those snap decisions, from moving from inner city out to suburbia or even further away states, not considering the fact that housing prices have risen so quickly, and how are they going to, you know, regain their money if they wanted to resell their house. So I think that's one aspect of the problems of the tyranny of now that I write about, that has caused a decrease of thoughtful decision making.
This is the tyranny of right now.
I get it.
The rush to make a decision. Yeah.
You know, somebody tweeted out, X'd out, whatever the heck you want to call it, something about patience this morning online, and I was like, amen. You know, there is no patience. There is, like, if you don't take care of something right away, this ability to breathe. I think about how we approach companies sometimes, right? You know, sometimes they have to invest. Sometimes they're going to have a bad quarter because they're thinking about the future and the future investment. So how do we, though, get away from this?
Well, I think you first need to think about all the aspects that are creating problematic stages to that decision making. The concept, you talked about it earlier, in social media feeds. I mean, most recently, the Surgeon General wrote about and created a warning on social media. I thought it unheard of basically our Surgeon General warning the public that that could be a challenge for our society. And part of that is created not only bias in confirmation bias, the feeds that we're getting are, reaffirming things that we believe, but not necessarily giving us a full viewpoint. Tribalism, I talk about that in the book, where it's about microsegmentation, which is great. You can find friends in small communities and forums like, vintage car racing that I enjoy, or whatever that nuance is that you appreciate, but also it feeds that segment of information. When you think about it on a geopolitical sense, that represents a lot of risk. That leads
it's funny in media, because I think about, Matt, if you think about, go back years ago when we were doing shows together, I feel like we used to do a lot more debates, whether it was on the markets, it was a bear bull debate, or we would talk about a company and you'd want somebody from different sides, a political issue, some kind of issue, you'd want a conservative and a liberal voice. And the idea was to present the different sides. And I don't feel like, I don't know.
No, we don't do that anymore.
A lot of that doesn't
it's
go
all
on
echo
anymore.
chamber. I mean, if you look at, well, I'll give you an interesting example. The other day I was looking through my Twitter feed, or my X feed, and thinking to myself, I've got to unfollow all of these people with whom I constantly agree. What's the point? I only want to follow
different points of view
and look into like the nutcases that I think are crazy. Is that the right approach, Greg?
Well, I think, I'm not sure I would say that, but I think that diversity of points of view are clearly necessary. When you think about it, when you're looking at that echo chamber you referred to, or what I refer to as tunnel vision, right? It is that confirmation bias feels good. It's a lot of dopamine hits. I mean, it's been documented pretty clearly that we like that as humans. But the reality is, it doesn't give us the blind spot coverage that we need to look at all of the information when you're making decisions about events. And so maybe it's following not just the people that you like, but maybe the people that you disagree with, and understanding their point of view.
Hey, real quickly, only about 30, 40 seconds. So do you think, speaking about big decisions of the last few weeks, President Biden made a really big decision?
He took time.
Do you think he took time?
Well, that's one of the keys, right? You've got to slow down. No matter what you're going to do, you've got to be able to slow down, set yourself aside, pause for a minute, and reflect on it. Number two, you've got to get diversity of opinion. Hopefully he did. And the third is to focus. And in order to focus on anything, IQs have been dropping 40 straight years. It is necessary for us to get away and focus on the tasks at hand in that environment in order to make good decision making. And we write about that in the book. So hopefully there's some key takeaways there that everybody can use.
Super interesting conversation.
Very
look forward to you coming back again.
And reading the book.
Yeah, Greg Petro.
The Tyranny of Now.
Yeah, exactly. Chief Executive Officer at First Insight, as you said, The Tyranny of Now is his new book that is out. Really appreciate it.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. You heard Charlie breaking down the trade here. We're just kind of off our best levels of the session, but man, we've got a pretty decent rally here, Matt.
Yeah, no, absolutely. I mean, the jobless claims number that we got this morning, and I just struggle with this because it was 230,000, and we were looking for 240. So beating by 7,000 layoffs, is that really what it's all about? But it's not just the beat, it's also the fact that it was better than the 249,000 in the prior period.
The revision was just a hair up.
Pretty much unchanged, but that was enough to send us off to the races. So yesterday we were up and then down into the close. Today we're up and not down into the close, at least not yet. And we only have 18 minutes to go.
Yeah, so we'll see what happens. Let's see what our guest has to say. Jason Bronchetti is with us, Chief Investment Officer over at Lincoln Financial. They had $311 billion in end-of-period account balances, net of reinsurance, as of the end of June. Joining us here on this Thursday.
Out of Radnor, Pennsylvania.
Thank you very much.
Yes.
I need a little bit of an assist today. Jason, good to have you here with us. It's been quite a week, and here we are. How are you thinking about the last 4 days? Maybe and then even going to the tail end of last week.
Yeah, it's first of all, thanks for having me. It's great to be here with both of you. We had been anticipating that there was a likelihood or possibility that we could see some bumps in the market, and clearly we saw that late last week with the employment news. As we're looking through that, one data point does not make an economic story necessarily, but it was an important data point, and we've been running along here with particularly low volatility for quite some time. I'd say that was really the aberration. So seeing a little bit of volatility was something that we're just trying to let clients know that this happens. This is not an atypical amount of volatility, and we've now seen a bit of economic data to prove that out, to the points you were making earlier about some of the employment data. I think as we see a few additional data points here, start to see things turn around a bit. So view this more as a consolidation as opposed to something more extreme.
Were you bullish before this last week-long period? Because as far as I can tell, everything has played out kind of exactly as we expected. We knew it was going to be a good earnings season, and it has been a good earnings season. We knew the labor market was going to soften. Obviously, the Fed's raised interest rates by 550 basis points, and the labor market has softened a little bit. The only sort of unexpected twist was the Bank of Japan raising rates and spooking traders that were that had borrowed in yen and bought higher yielding assets. But that seems to have unwound, and the Bank of Japan got dovish. So if you were bullish before last week, you should be bullish now.
Yeah, we as we came into last week, we've been a little bit more balanced in our view, I would say. I think we are starting to see some of the long and variable lags of the restrictive monetary policy come into play, and valuations are obviously elevated. I think that the economy, though, remains pretty well in balance. So I do think if you were bullish before, you shouldn't have changed your view much coming out of that. I do think that, seeing the employment data points soften, seeing some of the other statistics start to soften a little bit, it does give reason for pause. So again, just more of a generally balanced view on things. To your point about the yen, I mean, obviously we've seen that was one of the things that came in and just spooked the market pretty significantly. But to your point, we're seeing that abate, and JP Morgan had a report out this morning doing the math there, seeing that much of that carry trade has now been unwound. So I do think that we set ourselves back up in a pretty good, pretty balanced position.
Hey, listen, Jason, you guys are just out with a new report that basically gets into kind of the things that are top of mind for investors, what they're really concerned about. I feel like at Bloomberg, we talk about a lot of things. Certainly it's what the Fed does, what the economic outlook does, geopolitics. What did you guys find out?
Yeah, so the one thing about Lincoln, we have a really unique and robust multi-manager platform. You mentioned the $300 billion or so that we have in assets, and we manage that with a whole bunch of partnerships, great asset managers out there. And then we bring our insights out to the 17 million consumers that invest in and purchase our solutions. So one of the things that we do is we take the views from those 17 million customers, or really the 60,000 financial professionals that are calling on them, and we ask them, what are the questions that you're getting, or we get those questions, and we try to distill that down. So we take all the broad views that we get from our managers, and we distill that down into kind of a 60-page chart book, kind of a best hits. And we also come up every quarter with 3 key themes that seem to be on the minds of investors. And so each quarter we do that. And so most recently, the themes have been really around what happens to markets during an election year. There'd been also a vocal minority suggesting that the Fed might not act in an election year. What would the Fed do in an election year? I think that's been asked and answered, but that's the question that's been on folks' minds. And then the third point is just what's going to happen with rates and what will drive the Fed to act. So those are really the three themes that I'd say have been on the minds of most investors throughout the year, and really more so in the second quarter. And again, some of that's been answered, and the narrative has changed a bit in the last week given the volatility that we've seen.
But the other thing that you have your finger on the pulse of is, and I just know my financial advisor knows at any given time how broke and overstretched I am financially. How does it look for your clients? Because we're starting to see, fewer bookings with TripAdvisor, fewer bookings with Airbnb than maybe we expected. Visitors to Disney, they're growing, but not as quickly as the investors would like, and more people are staying at home and ordering Disney Plus. So do you see investors kind of trading down, holding off on bigger purchases, maybe a little bit more conservative? I mean, consumers?
Yeah, we're seeing a little bit of softening, but I do think the way that the rates, the impact of higher rates has played out, I do think it's had a disproportionate impact on the less affluent consumer. So we're seeing a bit more kind of trading down there. I think at the less affluent level, some of the folks that more the mass affluent folks that tend to be purchasers of our solutions, not really seeing any pullback there. And when we look at a lot of the coincident data, look at the travel bookings and as well. Restaurant bookings, some of those statistics still look pretty good. So softening perhaps at the margins and particularly at the less affluent end of the marketplace. But big picture, we're still seeing reasonable spending out of the consumer, reasonable views in terms of the markets and allocation of capital.
So somebody comes to you, got a chunk of money to invest. Where do you tell them to put it right now?
So we're really focused on the long term. So we think about it's best to invest in preparation as opposed to prediction. And so that's one of the things that we focus in on, is making sure that folks have a good long-term plan and they stick to that plan. And so that's one of the big things that we're focused on, is just thinking about protection. And being prepared, because there are going to be issues where things come down. We offer a lot of solutions around registered index-linked annuities, for example, that provide a degree of protection to the extent that you see some downturns in the market, but also give you that opportunity to invest and get some appreciation. So I would say solutions like that across the annuity and the insurance landscape provide a fantastic way to have both the appreciation as well as that downside protection.
All right, we're going to run. Hey, listen, thanks so much. Jason Borchetti, he is Chief Investment Officer at Lincoln Financial, joining us from Radnor, Pennsylvania.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.